Hey everybody, it's Brian, back for our next lesson in our Trading 101 series. Today we're going to talk about support and resistance. So let's go ahead and jump into it. As always, first things first, have to let you know that I'm not a licensed investment advisor and I don't pretend to be one here. Just showing you things that I've learned through the years, tools, techniques, systems that have helped me, and I hope to help you as well. As always, without going into a huge amount of detail, trading involves risk, and you should only trade with true risk capital. Not going to get into a bunch of detail about that. We've been through it in previous disclaimers, but if you need to, pause the video, read through the disclaimer, and then move forward at your leisure. All right, so next up, we're talking about support and resistance. Well, what is that? What is support and resistance? Well, support resistance is one of the most widely used basic trading methods out there. The market, when it moves up and down, kind of like a zigzag pattern. It doesn't just simply go one direction and then just turn around and go the other direction infinitely. It's a zigzag pattern, kind of like a stair step, if you will. Well, each time the market makes those stair steps, it's creating areas where it's having trouble breaking through a top or breaking through a bottom, and we call those support and resistance. The highest point is called resistance. It's like a ceiling. And the lowest point is called support. It's like your floor. And typically, if support is broken, that becomes a new level of resistance. And if resistance is broken, that becomes a new level of support. Think of it kind of like if you've got a trampoline. Let's say you're living in a two-story home that has a basement. You're on the first floor, and you've got a trampoline set up on that first floor, and you're bouncing along on your trampoline, and that first floor, that's your support level, and you're bouncing, and all of a sudden you get to the ceiling and you hit your head, boom, you come back down to your support level, and then you finally bounce really, really, really hard, and bang, you break through that ceiling into the second floor. Now that second floor becomes your support level. So what was resistance, which was the ceiling, now becomes support. Same way on the other direction down. Let's say you've got a trampoline in the basement down below you, and you're bouncing on the first floor on your support, and then you bounce really hard, floor gives way, boom, you break through that support level, and so now you're through that floor, and the trampoline down on the bottom in the basement catches you. Well, now the basement is your new level of support, and you're bouncing, and what was previously the floor, the first floor, becomes the new ceiling that you're hitting your head on. So that's a kind of a quick and hopefully visual analogy to give you some information about support and resistance. How do we actually use this? Well, I think the easiest thing to do is just draw some lines and show you support or resistance on a chart. So let's flip over here and we'll go over to my Interactive Brokers account, and what we have open is a gold chart. So we see a gold chart is open here. I've got some lines already on it. What we see is we see a line here at 1285. About 1285. We see a line at 1284. We see a line at 1280. And what does that mean to us? Well, 1285, 1280, these are kind of my main levels. These were actually, we saw these levels looking out on a larger scale. The 1284 is actually where my stop loss is, and I'll explain that in just a moment. So let's go ahead and zoom out a bit. We'll look over here at a 4-hour candle. And what we can see is just what I was talking about. The market kind of moves in up and down patterns, right? It moves down, it stops, and it moves around a bit, moves up, but it's not going straight up. And we see all these little points where it just kind of stops. And you'll see more points throughout where it seems to get to that level and struggle more than others. Like this 1290, for example, is a big level for us. So let's go ahead and look at that. So what I would do to draw support or resistance on a chart is I would just simply go to my chart area, and I would want to add a horizontal line. I want to make sure it's a straight line right across. And I can draw this line as I enable my horizontal line tool. You can see on my screen here as I move my cursor around, the cursor is moving up, moving down, and it has a line that kind of trails along with it. That's where I'm able to see and potentially leave this line at levels I might consider to be a support or resistance level. So looking through here, we can see how prices just kind of come down over since early March, and it kind of came down to this level, and it's just been bouncing comes down, it hits kind of a low, and it bounces back, and it comes down and makes a big wick, but can't really close below that, bounces back up. Again, comes over here, makes a wick down, bounces back up. Gets over here, does the same thing. And then it finally breaks through it. And now as it's broken through, it's using that same level as the ceiling, where it comes back up, bounces off of it, comes back up, bounces off of it, comes back up, bounces off of it. So that's where we're seeing these support and resistance levels. So we can just take that where it's touching the most times and drop a line right there. So now I've got a support level drawn here at 1290. And we can do the same. We might look up a little bit higher and see where else do we see some major areas where price has been kind of coming down to and struggling. Well, we see it right over here at this 1300 as well. We see for price, if we go back a little bit here, let's just go back in time a little bit over here. We can see where price has been coming down and struggling right around this 1300. Same thing this way, same thing over here. So that tells us that 1300 is also a pretty major area for us. So now I've got some lines drawn where I see support and resistance. Down here, moving down, you can see where I have 1280 down here. 1280, we had broken through and moved down, and we're seeing this 1280. It broke through it, struggled, couldn't break above, struggled. Has a big wick on that candle, but then came back and it still couldn't close above. Finally broke through above it, and now it's coming back and retesting this as support. Broke through it down here, comes back and retests it again as resistance. Resistance finally broke through it this morning. Might come back, and it tested it earlier as support. So we're able to see how these levels kind of come into play. So that's that 1285 level. Same down here, 1280, 1274, 1275 really. We see the same things. So what we're able to do is we're able to use the history of the chart, which we talked about what these bars or candles, in my case candles, what these candles represent, what they are, and we're able now to look at that and say, okay, based on this instrument, this gold chart that I'm looking at, I can see key levels where gold kind of comes to and has trouble breaking. So if I'm using this as a support mechanism, for example, if I could say it's 1274 support, when price comes down here after it's set this level up, I might want to buy gold off of that 1274, 1275 area. It's going to eventually break it. You're not going to be right every time. But if it comes down to that level, I know in the past it's had trouble getting through there, so that's a great spot for me to buy. As it comes up and tests this 1290 area, I know that's a great spot for me to want to sell. So as it comes to these key areas, depending on whether price is broken above it or below it, it tells me whether I'd want to buy it or sell it at that point. So I look at large time frames. Now you can scroll back out and go down here to a shorter time frame, which is the 30-minute, which is what I'm on now, and I actually have a trade on. Here we go. I presently have a trade on. We can see this 1285 area. Price had broken above it yesterday, floated down over the course of yesterday during the live trading session. It's flat through the evening. This is what it's done today. Today it came up to this level, hit it, reversed back off of it, came down to this 1280, 1281 area, reversed off of it, and now it broke above, closed above it, broke through it, and it's been struggling right around this 1285, 1280, really 1285 area. So when price has been struggling here, I went ahead and entered a buy order off of that 1285, saying, okay, if price, can't break through this, I would expect it to bounce off of that and continue maybe back up to this 1290 area where it might see some resistance. So that's how we would use it practically. Now I have another line down here. So on an intraday, on a shorter term time frame, I'm able to see that there's actually even another level right below 1285, which is really 1285 and a half. There's another level down here at 1284. So when I entered my buy order, I'm able to say, okay, well, if it can't stay above this and it comes down as far as 1284, then I'm willing to put that level of risk. It's 1.5 points of risk on the table. We can see I was in at 1285, and if it, or 1285.5 really, if it comes down to 1284, then I'll exit that trade, and I'll have been wrong, but I've only risked 1.5 points on that trade. 1.5 points, $50 a point to take that trade. So you're looking at $75 of risk per contract to see if I potentially have this bigger upside to it. So we're looking at 1.5 points of risk to potentially look at reining in 5 points of profit. So that's what I'm looking at here from a trading perspective. We'll talk more about this as we get into further into applying different trading methods, but I hope this gives you some quick down and dirty examples of what support and resistance looks like, how we draw it, and how we can use it very quickly to apply to our intraday trading. And that is it. Let's pop back over here to the presentation and flip back over here to summarize things. Support and resistance is one of the most widely used trading methods. Why is that? Well, because it works, especially when you're talking about speculative markets like the E-minis. You're looking at the futures, the gold market, silver market, oil. All of those things are very speculative. Now, as we get into Forex trading, I have some qualms about utilizing support and resistance when it comes to foreign exchange trading, because that market is different from the speculative markets, and we'll talk about that as we dive into Forex specifically. But it is a very, very widely used trading method, and it's widely used because it works. The things we want to take away from this: support, when it's broken, so the support is our floor. When it's broken, it becomes a new level of resistance. Resistance is our ceiling. When that is broken, then it becomes support. And the more a level is tested, meaning the more that price, especially on larger time frames, a price comes to an area and reverses off of that, the more it does that, the stronger and stronger that area becomes. All right, so that's it for support and resistance. Tomorrow we'll talk about breakouts and how we can utilize another type of strategy, which actually has to do with support and resistance, but it's looking at how we could apply support and resistance with a very simple strategy utilizing breaks of these key areas. All right, so that's it for now. Have a great day, and we'll talk to you soon.